So Mr. Fairclough joins us on a very big day, in fact, for Eurozone banking. The ECB poised to unleash billions of cheap euros. Huge expectation on the markets.
Absolutely, and yet if we look at the European markets, Stuart, a little bit cautious going into this. Lots of investors simply want to wait and see what the kind of numbers are from the ECB. We'll get into the details of that LTRO in a moment. Let's bring up the European markets at the opening. You can see they're just a little bit cautious. Paris and Frankfurt up around 0.5% or so. Remember, there's still quite a lot of nervousness out there. Ireland want a referendum on the fiscal treaty to harmonise taxes across Europe, and we know that the Irish have got form in turning down treaties that concern Europe in the past. I will just mention as well one earnings for you. IAG, to you and I, that's British Airways and Iberia. Fourth quarter profits quadrupled up to 217 million euros. But at the same time, the oil is up again this morning, up to around $106 a barrel. That's on the US markets. At IAG, warning that 2012 is likely to be a difficult year, partly because of those oil prices going up. Let's leave those alone for a moment, give you the Asian markets. A little bit choppier there, but the Nikkei did manage to end the day around 1% up. You can see just the Shanghai Composite a little bit off as we go into this LTRO with the ECB.
So all eyes on the European Central Bank this Wednesday. Before Christmas, of course, it gave banks unlimited access to cheap 3-year loans. They took nearly 500 billion euros. They're poised for a similar big helping of credit. So how does a long-term refinancing operation work, and what does it mean, Owen?
An attempt to keep credit flowing in the face of the debt crisis. The European Central Bank is offering a second LTRO, or long-term refinancing operation. In its first LTRO in December, the ECB offered to lend banks as much as they wanted at an interest rate of just 1%. Over 500 banks lined up to borrow the practically free cash to a tune of 489 billion euros, an influx of money meant to help banks lend to households and businesses. And it seems to have calmed the Eurozone's troubled waters. The president of the ECB said the bank's first LTRO seems to have contributed to dramatically reducing the financial instability that still persisted until year-end. Tensions in the banking system have indeed eased since December, with the borrowing costs for debt-racked countries like Spain and Italy lowering and rallies in European stock markets. But cash infusions are more of a band-aid than a long-lasting solution for countries suffering under mountains of debt. And a large uptake of cheap credit could also deflate confidence, a signal that European banks are starved for liquidity.
Just to pick up on some of those numbers for you, Stuart, the big winners, I should say. Previously, from this whole European Central Bank credit fest, were Spain and Italy. You'll remember before Christmas, we thought these two countries were potentially going to go bust, particularly Italy, where we saw borrowing costs going up and up into bailout territory above 7%. Since the ECB put all that money into the market in December and are poised to do it again today, we've seen borrowing costs coming down pretty dramatically for the likes of Spain and Italy. Those are the numbers on their 10-year bond yields. That's the interest that investors charge the government for holding that debt. Okay, still high, still around 6%, but we're nowhere near the real danger zone that we had just 6 weeks ago or so. Some big moves, really, for those two countries.
And quite a bit of that original money simply been put into the ECB, so there's still lots of fear?
Well, yeah, it seems almost absurd and sort of contradictory that the ECB will put all that money out there for many banks just to simply park it in the ECB. They're entitled to do that in what's called an overnight facility. And that's basically somewhere you can put money, low interest rates, and it gives you ready access to credit. The problem is that's kind of not the idea that the ECB wanted. The ECB wanted these banks to take that money out there and put it into the market, get it lending to people like you and I so we can buy houses, cars and so on. Yes, it's true to say that lending has gone up a little bit. In January, for example, private sector lending in Europe increased by about 1%. There was around 8 billion more euros put into households, banks and so on, lending to private companies. But to put that into context for you, in the US alone in the last quarter, bank lending to households increased by $130 billion. So you can see massive contrast between Europe, which doesn't really want to lend right now, and the US, which is already back on its feet, already manufacturing and pulling ahead of Europe in terms of growth.
OK, well, we're going to pick up on a few more of the day's headlines then. And Google's new privacy policy will violate new European data laws. That's the verdict of an inquiry by French regulators. They say Google is too vague about how it will use data collected from users who log into multiple sites like YouTube or Gmail. Google is trying to create a broader profile of its users so it can help advertisers more accurately target potential customers.
And Veolia's chief executive faces a critical test of confidence at a board meeting later this Wednesday. Antoine Ferraud's future has been the subject of intense speculation that former boss Henri Proglio will try to oust him over the declining performance of the French water and waste management firm. Proglio was forced to step down 2 years ago after his appointment to the head of EDF caused a conflict of interest, but he remains on the board at Veolia. OK, we're going to cross the Atlantic now. I mentioned GM a moment ago. Mitt Romney's victory in Michigan turned the state into a key battleground in the United States, and few cities in Michigan better symbolize the financial crisis in the US than Detroit. Foreclosures and the loss of iconic car brands like Pontiac put Detroit on the map as one of the most distressed cities in the US. But there's plenty of optimism in this city that's returning now, and that's largely been led by those same automakers, the likes of GM, which is seeing optimism return.
Working round the clock, General Motors have added a third shift to their plant in Flint, Michigan, a sign that the US auto industry is getting back on track. Tony says he doesn't mind working nights. He feels lucky to be able to provide for his family.
So the fact that they're selling and we're working 3 shifts, building, like I said, I think 250 trucks a night, we're pumping out some trucks every day. And for GM to commit to that, that says a lot about where our economy is going.
GM's also announced they'll pay out millions of dollars worth of employee bonuses based on performance last year when they turned a record profit. The auto giants bounced back since 2008, which saw GM teetering on the edge of collapse. Saved by a $50 billion government bailout, the car manufacturer has now recovered to the point where it's looking to buy a 7% stake in Peugeot, thus reviving its activity in Europe. GM's home of Detroit was once the 5th richest city in the country. It's long since fallen on hard times. Abandoned factories, boarded up houses, unemployment peaked at over 14% in recent years. During this year's Super Bowl coverage, actor and director Clint Eastwood lent his face to GM's publicity campaign, talking about the tough times the US has faced.
The people of Detroit know a little something about this. They almost lost everything, but we all pulled together. Now Motor City is fighting again.
Eastwood's high-profile ad was seen as something of an endorsement for the bailout, a thorny issue among Republicans, many of whom were against such wide-scale government intervention. President Obama has underlined that his decision to bail out the industry was key in its gradual recovery, a debate that posits Michigan as a campaign battleground in the upcoming election.
It's a well-known saying, go ahead, GM, make my day. That's the one. Owen, thank you very much. Owen with the business. Claire's back really shortly with the news. Stay with us.